All right, guys, so it's almost 9:30. It's 9:29, and we're getting ready to see what move we will get in the market. And we got a sell trade. Let's see if this one, okay, so it's not going down. It starts to go back to the upside. Let's see if it continues to the upside. Looks like some volatility wants to come into the market. Looks like it's undecided. Okay, the price is pushing up. If it's pushing up and it continues going to in that direction, we could be getting a decent move to the upside. All right, so it's pushing heavily to the upside. Let's see if it continues like this. Getting a little pullback here, expecting price to continue moving up. We just hit one of those areas of resistance from other strategies. For example, I'm looking at another chart as well, and I can see that we hit the 200 period moving average. We also hit a trend line, which was also at the same place with the 200 period moving average. So that explains the reaction that we had. And now price is going through that. So there are many areas of support and resistance on a chart. Many different trading styles, many different traders use them for different strategies. And in a lot of cases, you will see the market react to these areas when it gets to it. But these are retail trading areas that we're talking about. What I'm talking about is institutional trading areas, because the price is going to go to the institutional trading area. Okay, so those are the areas that I'm really looking at, the institutional trading areas. And we have an institutional zone at, let me see here, 34, 49, 94. Around that price, we have an institutional price level. So there is a zone around that price level, about 20 ticks above, 20 ticks below, that we'll be looking at. Right now we are within that zone area, so we're at that institutional level. And what we would like to see is, we want to see the price kind of go sideways around that institutional level. Let me see here, 1 second. Looking for my epic pen. 1 second. I could have sworn I had my epic pen on my desktop. So I'm just looking for, okay. All right, so bringing on my epic pen. So as I've told you guys, Price is now at our institutional level. And it's blowing through that institutional level, going to our next level. And this is the type of price action I like. You guys can see that we're already at $60 approximately. And you can see our drawdown is decreasing very, very fast. So what we could see as well is, a little bit of choppy price action, price continue to the upside. That's what we want to see. Price hit another institutional level and we are getting a pullback. Is that pullback going to be aggressive? Is that pullback going to be deep? I don't think so. I think we have caught a lovely trade setup today, and price may be going up maybe for the rest of the day. Great possibility price may go up for the rest of the day. So price starts to cool off and we may start seeing something like this. And then it may continue to the upside. Let's see how it goes. These are the areas where you typically want to exit your trade and wait for that price to give you that corrective type formation to continue moving to the upside. However, there is still a great possibility price may continue pushing up because we do have a lot of time left. It's just 9:37, so we do have some time, and we could see price give us a pullback now. So we're getting that pullback. So we could see something like this, and then price continue moving up. I don't think we're going to just get, price just completely reversing and then doing something like this to continue down. I don't really see that coming. So guys, as you can see, whenever price gets to these liquidity map levels, you could see the price give you pullbacks like this. A reaction. Sometimes it's strong, sometimes it's not very strong. So you can have multiple trading strategies using the liquidity map. You can have those counter trend trading strategies if you want to scalp the bounce in the opposite direction, or if you want to trade more as a trend continuation trader, where you want to allow the price to correct and then continue moving up. So you would kind of trend the correction and buy the breakout. So there are many approaches you can take with the liquidity map. Right now we're using the auto trading robot, and that's why we're not getting involved with the trades. We're just letting the robot handle everything on its own. It does not matter if we could have intervened and taken $60 instead of 30. It does not matter. We're going to let the robot run by itself, not get involved at all. Let it have its winning days. Let it have its days when it gives back some of the profits. Let it have its losing days. And overall, within 3 to 4 months, we should be able to double the account automatically without us having to intervene at all. We're getting a deep pullback. It's pulling back deeper than I would have liked. So what you can look for now is something like this, and if price comes and breaks out from here, we could continue moving up again. We're allowing the price to do whatever it wants to do. Remember, the robot is designed to be liquid. It's designed to flow with the price. So we're giving it 30 minutes from 9:30 to 10 o'clock to catch as much profit as it can. We have about 18 minutes left to the hour. Volatility is starting to die down, but if we can cross, let me just put back my, if we can cross this level, price can get above here, we may get a pullback to this level and continue moving up. Let's see if we have enough time to catch that. Still have the possibility of a sideways move, maybe around here, then break out, then pull back, then continue moving, because we're looking for price to break above that level. I'll leave this on just to have you look at it as an example of what we can expect. The clock is ticking. But really, it doesn't matter that much. All we're looking for is to allow the EA to do what it has to do. Okay, we don't have to get involved, but we can. So if you're someone who understands price action very well, you could read the bars, read how the price is moving, especially if you have the liquidity map. It will let you know the exact zones where you can exit and walk away with a lot of profit. For example, at this level, this was the exact area where you could have taken profits. So once the price comes back, break above that area, we will expect price to potentially continue moving up. It doesn't mean it can't do something like this. Come here, make one more here, and then do that. It could do that as well. As a price action expert, you will know that. These are called corrective formations. And price can create a lot of them, a lot of different variations of it. This could also have been, whoops, I'm terrible drawing with these drawings on the chart. These freehand drawing tools, pencil tools. So this could also have been all of the correction, and price could, as I said, do this and continue moving up. Come back, retest, go. That's a possibility. So many possibilities in the market as a technical trader. If this is going to be going back to the downside, then you could see something like this. Come back here and continue moving down. So that's also a possibility if price wants to go down. So many possibilities exist. Whichever one price chooses to do, we are just going to flow with it. There is also this one. That possibility exists as well. So as a manual trader, sometimes, especially a manual trader who trades patterns, it becomes difficult to try to track all of the different variations that can possibly happen. And that's what causes a lot of traders to become losing traders, because they're unable to track all of the different variations that can happen in price action. So it becomes difficult. And price has a way of trying to trick you. So it's always good when you know, okay, price, once it gets to this level, that's where I want to take profits. Or once it gets to that level, that's where I want to enter. Okay? And generally the same areas where you're going to be entering and exiting are the areas where you'll be taking profits as well. So normally the area where you take profit is generally an area where you could enter as well, to go in the opposite direction, that is. So for example, if you took profits around these levels, this level right here, that is also an area where you could have gone short, right? But it depends on the strategy that you're using to go short, because this would be a better opportunity for a scalp setup, right? You take a scalp trade to go short. But if you're looking to try to trade with the trend, then you're looking for longs. I'm looking for long, so I'm not looking to try to go short or anything like that. This is doing, looks like it's doing that. So there is a possibility it stops here, comes back, and then goes. Also, a possibility it does this and continues moving up. It's all based on what the price wants to do. We don't have any control over it. We only can try to predict it. And that's what makes trading manually difficult. So for me, using the liquidity map, what I would want to do is allow all of this to happen as a trend trader. I'll allow all of that to happen. Just allow all of whatever is happening here to happen. And if the price comes and breaks out, then I would jump in to go long. All right, so that's my alarm letting me know that I have another live stream coming up. So I'll be jumping off with you guys as soon as this trade closes. So more than likely in this 30 minutes, this would have been the ideal area to exit. So far, that's how it looks. We have 10 minutes left. Price could just explode again. We don't know which one is going to come. No one knows which one's going to come. We can anticipate that it's going to go up. Is it going to go up now? We don't know. That is why I love trading with robots. You set it and you forget it. You just let it run. But that robot needs to be coded very well, and it needs to have a very good strategy. Also with this robot, it's not about how many trades you win. It's about how big you win. So you could have 10 trades and only one's a winner. And the one trade that's a winner makes up for the 10 that you lost. And also puts you in profit. So this EA is not about a win rate. The win rate on this EA could vary. It all depends on market conditions. This EA trades market conditions. So we're slowing down quite a lot. So that first burst of price has ended. And we're looking for the next move, which could be down, it could be up. We don't know yet. Right now the price is looking like it wants to come down, but it could also go back up. So for the day, we were down $8.52. And right now we are at $29. So let's see how it plays out. How are we going to end this trading session? We have approximately 6 minutes left. we could still see price action that looks like this, then possibly come back or continue to the upside from that level. All right, so price has come back to this low here. So potentially we could see price come back around this level and possibly come down or continue up from that level to this one. Let's see what price wants to do. We have about 4 minutes left. Let's see if they're going to give us 4 nice bars like these. Three minutes left. We have about 2 minutes left. More like 1.5. Price is struggling right now. One minute left. Less than 1 minute, more like 30 seconds. And it should be closing now. There you go. We're done. That's it for today, guys. We walked away with about $20. Not much. Overall, between our 2 trading sessions, $20 profit. Could have been more, but price action did not allow it. Thank you very much for today. I'll see you guys tomorrow. Bye bye for now.